A lot of businesses, if they're smaller, they think they need a CFO to make themselves sound successful, to be able to put themselves in front of investors or banks and things like that. A fractional can do all of that too and do it just as well. So it's definitely something for smaller companies that don't have the ability to absorb that full-time CFO salary to really get what they need.
Welcome to the Profit Answer Man podcast, where business owners learn to scale their profits and cash flow and work less doing it. You built your business to fulfill your dreams and serve your mission. You're the backbone of America, creating the jobs and opportunities that keep our economy moving. And for that, you deserve to be well rewarded. We're Profit First certified. It's the first baby step in a journey we take our clients on, building cash-rich, margin-strong businesses that don't suck the life out of you. Check out the first 13 episodes of the podcast. It's Mike Michalowicz and my review of each chapter of the Profit First book. Around here, we speak cash flow, profit, and practical execution. No accounting jargon, no fluff. Most accountants, they might help you save on taxes, but they'll crush your cash flow and make you look unprofitable. That's not just a poor decision, it's a liability. We help you focus on what you love. And when we partner together, we become a profit center for your business. If we don't deliver a massive ROI on your investment in us, fire us. Want to see how it all works? Watch the video version on YouTube or head over to ProfitComesFirst.com to grab your free copy of the Profit Blueprint book and start making profit a habit. You built this business to serve your mission and your freedom. Let's make sure it pays you back big. Today's guest is Laresa McIntyre, a certified management accountant and founder of Rockbridge CFO, who helps growing service businesses turn financial chaos into clarity. What if the real reason your bank balance never matches your good P&L is that you're tracking the wrong game? Too many owners chase top-line revenue. You've heard me say this 1,000 times, while ignoring margins, cash timing, and the balance sheet. That's where wealth is made. In this episode, Laresa and I break down why your P&L isn't cash, how to spot money-losing products and clients, and simple rhythms like the 12-week cash flow forecast, revenue per employee, and real working capital view that keep you out of Friday payroll panic. You'll leave with practical ways to price for profit, stair-step hiring after sales, and using a fractional CFO to get executive-level insights without the executive costs. Let's meet Laresa and see how she does it. Welcome to the Profit Answer Man, Laresa McIntyre. It's great to have you join us today.
It's great to be here, Rocky.
Excited to learn from you. Can you share a little bit about yourself and your business?
Sure. I am the founder and principal of Rockbridge CFO. It is a fractional CFO firm. Came from the corporate world, and now I'm out there trying to help founders and business owners with CFO knowledge and insights to help them grow their business.
You've got a couple other degrees and labels behind your name. Do you want to tell us what they are?
Sure. I am a certified management accountant. I have an MBA from Capital University and a master's in accounting from Florida Atlantic.
So before we hit record, we were going back and forth on this. I have an MBA. My wife's a CPA. To me, they really don't help the business owner actually run a business. There's a lot of theory and a lot of academics, but not a lot of reality. Whereas the management accountant is the one that at least knows how to look at the reports, or actually, more importantly, how to build the reports that say, hey, here's my business. When $100 in revenue comes in, this is what my true cost of goods are, not just what you paid for materials, but actually what does it cost in your particular facility or whatever type of business to actually build and deliver, or however, whatever service you have. And then this is my unit cost, like so that you can understand your variable costs, your fixed cost. Now we're getting into gobbledygook. But the point is, you understand, hey, these are the metrics. So now I can do the correct pricing. I know how much I need to sell every month. I know where my step ups and step downs are in
Mhm.
profit and how to do all of that. So I know I kind of simplified it all. What have you found, like from your experience of all of that? What's most important for the business owner and what got you that wisdom?
The CMA really is more focused on how the business operates. A CPA, not to belittle any of my CPA friends, they all, I have great relationships with a lot of CPAs, but obviously they are there and they go to school to learn the fundamentals of how to put a financial statement together. They're there to learn tax and make sure that financial statements are compliant. I still do that, but that's not my focus. My focus is making sure that I understand what's happening within the business and how to connect the dots with all of those things that you were talking about, the margins, the pricing, how that all plays into the business being able to grow and be successful. And, that I think the CMA has been a huge help for me. I've always been in the entrepreneurial world. I've worked for a few big corporate companies, but for the most part, it's been privately owned entrepreneurs. And I find that that CMA has really helped me relate with them and be able to connect with them.
Do you find that most companies have somebody either in their organization or available to them that brings that specific type of expertise to them?
A lot of times, businesses will turn to their controller if they don't have a CFO. And again, not to belittle any of my controller friends, but a lot of times their focus is really on compliance and making sure that the financial statements are right. Think of a bookkeeper and a controller is kind of looking at the past, and that CFO is really the person that's looking in the future. They're taking that information from the past, the history, and really taking it and pushing it out to what does it look like 6 months, a year from now, 2 years from now, and really bringing those insights to the business so that the founder or the executives can figure out what are our next steps to be able to be successful.
And I think that's the key. What are our next steps and where should we put our efforts? And it doesn't matter how big the company is or how small it is. When you look at all your offerings, when you look at it through the lens of a management account and you go, those 6 products make us lots of money, those 12 products lose us money, and these 3 products break even. How about we only focus on the ones that make us money or somehow change the other 2 that they make us money or we got to get rid of them? So sometimes pricing power says, that's not going to work. Get out of it. Sometimes the inputs are not available to you like they are a competitor. In other words, if your competitor has massive volume, they're going to win on margin because they can get things at a discount compared to you. So at that point, don't compete. Like, don't try and compete because even if you sell $5 or $10 million worth of product, if you've got no margin, you're not making any money.
Exactly. In fact, I just put a blog post out there this morning on margins and how you have to look at it and make sure that everything is adding to the bottom line. There's been lots of situations where I've heard, you know, this client's great, we've got lots of revenue from them, but when you really dig into the details and you look at the service delivery model and you start looking at their pricing, you're going, why are you doing business with these people? You're not adding anything to your business. All you're doing is adding to the top line, but not the bottom line. And really, revenue's one thing, cash is a whole different thing. And being able to have the cash to be able to run your business is what it's all about.
It's funny because just this morning with a client, we were doing this. We were going through 2 separate lines. We were looking at gross profit dollars, and then we were looking at gross profit margin. And so we were stopping at a couple of accounts. I'm like, oh, these are great accounts, like lots of gross profit dollars. Then I went down and looked at gross margin. I go, oh, we're actually losing money on these clients. They don't have the margin that we need. And so while they're generating, as you said, the dollars, they're not helping us pay our bills. And so that becomes a problem. We also talked about the term fractional CFO, and I don't think I've ever really defined what's a fractional CFO in your words.
Businesses, when they're at a certain size, can really use the insights of a CFO, but there's a big price tag that comes with a CFO. Uh, we're talking six figures, and if you're just starting out, you don't want something that's going to eat up all of your profit for one salary. So that's where fractional comes in. A fractional, think of them as a part-time CFO. They come in, they'll spend 15, 20 hours a month with your team or with you, providing you that financial guidance, which is pretty much just enough when you are a smaller organization. And, I get to split my time with multiple businesses, multiple founders, which is exciting for me too, because it's a challenge. It's one of those things where I get to help multiple businesses and, it's a win-win for everybody.
It is. And honestly, I think for a lot of smaller businesses in the seven figures, they don't even need that much time. They need a fraction of that. And compared to a CFO, you can find somebody like, and I don't know your pricing, but somebody like me is 10 cents on the dollar to hiring a CFO. And when you look at that and the return you get, it's usually a no-brainer type of a conversation. Matter of fact, I was just having a sales conversation with somebody this morning. And when I laid out just the cost benefit ratio, he was like, A, that's life-changing money. And B, it's not even like it's not even worth having a conversation about what it costs because it's just worth it.
And, a lot of businesses, if they're smaller, they think they need a CFO to make themselves sound successful, to be able to put themselves in front of investors or banks and things like that. A fractional can do all of that too and do it just as well. So it's definitely something for smaller companies that don't have the ability to absorb that full time CFO salary to really get what they need.
So true. So, what are some of the biggest financial blind spots you see as businesses are growing?
I think businesses tend to focus very much on top line, like looking at the revenue and measuring that as their way of success, of measuring success. That's all fine and well, but if your revenue is not translating into cash, if you're not collecting from your clients, if you're not watching what you're doing from a spend perspective and making sure that your cash situation allows you to continue to operate, that can be a problem. And I think that's one of the biggest issues that I see is this idea that the P&L is everything. The P&L is an important report, but it has to be taken in context and it has to be used in conjunction with other reporting and other forecasts. A lot of people don't understand that a P&L is based on a set of rules that were established by the accounting community to allow investors and bankers to have an apples to apples comparison of different companies so that they don't have to really think about what's on there. The P&L is not cash. And as long as a business owner understands that and uses it in context with all of those other things, that's really what they need to do.
And I think that is a big aha that what is missing on the P&L is if the owner's taking distributions or draws from the company, none of that's there. If the owner has borrowed money and they're paying it back, a lot of the financing doesn't show up on the P&L. And so that's not there. Income taxes are generally not depending on who's doing the books, not always on the P&L. And then depending on who's doing the books, some have depreciation and other types of things, some don't. It's the question of how accurate and timely are the books, and how is the person who's doing the books doing it, and what standard. And what I found is there really isn't a good bookkeeping standard. And so it's very easy to get convoluted. It's funny how many conversations I was having today about this, because it's even in how you put an invoice into your accounting system. What I mean by that is, let's say you're selling a large project, a deck, a house, or something that takes months to complete.
Mhm.
A lot of times I've noticed they'll just put the entire invoice in day one and say, this is the invoice for the project. Mind you, they're on a draw schedule. So they get so much as a deposit, so much when they start, so much when they finish. But their books are saying you got all this money.
Right.
And yet their cash is, no, it isn't even due to you yet. You haven't even earned it yet. And yet you're showing you have all this money. And I think that's where things get wonky. And I don't think most people look at their balance sheet.
I would agree.
I look at the balance sheet month to month, and I look for the monthly changes. I find very few people do that. Do you
No,
do
I
that?
would agree with you. A lot of people, again, I think there's such a big focus on that top line, bottom line, how am I doing, that they miss those other reports like your balance sheet, like your cash flow statement. And looking at your balance sheet can tell you a lot. I mean, one of the best things to look at is your working capital. Well, how do your assets and liabilities compare to each other? Do you have, a good cash runway? Those are the types of things that people often miss out on. And that's where they find themselves into trouble, where they're on a Friday afternoon going, oh my God, how are we going to make payroll next week?
And I think that's a constant thing. And they might sit there one Friday afternoon and go, oh my God, there's so much money in the bank account. But if you looked at the balance sheet, you're like, oh, your accounts payable is 60 days past due. You haven't been paying your bills. That's why there's so much cash in the bank account, because you owe a bunch of people. And if you don't see those changes and how those are changing month to month, I think you get confused.
Mhm.
You don't understand why the cash doesn't match what you think is happening in the business.
Agreed. That's why too, I also encourage companies to have a 12-week cash forecast. I know it can be an arduous task to put it together, but I think, or some people think that, but I think if you sit down and you actually take a look at, okay, how are my clients paying me? What is the cadence of the payments that I'm getting from my clients? What do my vendors look like? And you put it on a piece of paper so you can really understand, what does your cash look like going forward? It's not just about what's in the bank today, but what are you going to have in, 4 weeks, 5 weeks, 12 weeks time? And constantly keeping that updated is really, I think, fundamental to business success.
And so for our clients, some are short-term clients, meaning their money all comes in relatively quickly. We'll do a 12, 13-week cash flow. For the clients like the one I talked about before with the large project details, we do the monthly cash flow. I find it all the time is usually in setting it up. And once it's set up, our monthly cash flow clients, 10, 15 minutes a month. Our weekly, it's probably not going to be much more than that per week, because we're dealing with just big chunks. We're not
Mhm.
getting down into like, oh, how much is the phone bill this week? Who cares? Like, you're going to have so much money coming and going every week. It's not hard to predict when, because most things are systematic. And same thing goes, going back to the construction company. When you get a deposit, you have to go order materials, and there are a percentage you can figure out, okay, I ordered materials today. I owe that bill in 20 days. And so you know what's coming, but we forget about it. And honestly, I'm just as guilty because today the bank told me I had a $3,000 check that went out. And I'm like, who did I send a check? I mean, I rarely send checks in today's world, but like, what did I spend money on? I totally forgot. And I went and looked and go, oh, yeah, I did do that. And it was only a week ago and I forgot already that I did it.
Well, and this is one of those blind spots that you were asking me about is people will forget about the annual renewal that they have for their insurance. Or, maybe there's a piece of software that they have an annual renewal for that is a sizable amount of money. And if you're not tracking these things and making sure that they become part of your forecast, they can catch you off guard. Very, very much so.
So does April 15th. What? I have a tax bill? Yeah, you haven't paid taxes all year. What did you expect? you know,
Right.
it's time. And even if you file an extension, you have to file a payment with
Payment.
the
Yeah,
extension,
that's
which
correct.
people don't realize. You still have to do those types of things. As companies are scaling, how do they know that maybe they're going too fast, which seems odd? But I know from a cash flow standpoint, I can look at a business model and say this business model can scale with ease because the cash is always coming before the expense. I can look at another business model and go, this business is going to have to stair step because their cash is so far after their operations that they have to wait at each step of growth for the cash to catch up to them. What have you seen?
I think it's very easy if you're growing to add people to your business without really stopping and thinking about the implications it has. Not just from a cost perspective, but also, what are they going to be doing and making sure that when you hire, it's the right time to hire for that position. The last thing you want is to hire because you think you need a position and then they're sitting around doing nothing while you try to play catch up to them being there. A measure I like to look at is revenue per employee. If you track that over time, you would hope that it would be a fairly steady number. If you start adding people and that number starts getting a little out of whack, that's sometimes a good indication that maybe you've gotten ahead of yourself a little bit. The people thing, I think, is one of the big dangers when it comes to scaling. Thinking, hey, I'm ready for adding this number of people onto the business, but you're not.
And so we have two things with that. One, we add people after sales, not before sales. So in other words, we don't go, oh, things are going to go and we're going to grow so much. So I'm going to hire a bunch of people. No, 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 no. Show me the money
Mhm.
and then you can hire the people. So it's a timing of when you bring them on. What you talked about, we use something called a labor efficiency ratio. And so we look at the cost of labor versus gross profit because, like we talked about, revenue is kind of irrelevant. And by looking at that ratio, you can start to say, hey, for every dollar I'm spending on people, this is how much gross profit they're bringing me. In other words, they're bringing me enough money that I can justify that role in that person. Whereas if you can't do that, I've seen times where it's like your payroll is so high that you're never going to succeed. Like it's just, and they're like, but they're all so busy. I'm like, I don't know what they're doing, but they're not delivering for the client, right? And it, because they have so many people that were never trained that while they're all busy working, they're all stepping on top of each other, creating fires, and they're all firefighting each other, not delivering for the client.
No, it's a fine line. It's sometimes difficult to figure that out, but I think if you're looking at your numbers and you're having conversations with the right people that can help guide you from a financial perspective, you can figure it out.
everything is figure outable when you have clarity on what you need to do. And that's what most people, they like, tell me what I need to do or show me the numbers and I'll go do it. But they don't always have that, which is kind of brings up the topic. You talk about financial fog. What do you mean by that?
Founders that don't have a finance background, they get so intimidated by the numbers. They they want to understand, I think, but sometimes it just goes right over their head and they walk around in a financial fog. They just don't understand what's happening with their business from a financial perspective. That's why it's so important to make sure that you have somebody that you can have a conversation with, that you trust, that you can be honest with, and they can be honest with you. You don't want to have conversations with people that are going to tell you what you want to hear. You want to have conversations with people that are going to be forthright and honest with you. If you want to be successful in business, you got to have a thick skin. And that means sometimes you're going to hear things you don't want to hear. And as long as you're open to that and willing to work with whoever you're having that conversation with, you'll have a lot more success than if you kind of shut down and walk around in that financial fog.
I call that people who are allergic to the financials. You know, they don't want to look at them for whatever reason. And there is a lot of emotions around money and
Mhm.
math and all these types of things. And if you're dealing with that, you know, it's time for an allergy shot, right? You got to get over it because you're running a business. And if you don't understand the language of business, you're going to struggle with that. One of the other things that really surprises me is most businesses don't have, I'll call it a dashboard or even targets. In other words, they don't sit down and say, hey, for this year, this is what I want in revenue. In order to get this kind of revenue, this is what I need in lead flow or number of transactions. Like, hey, if I'm going to hit this revenue, what do I have to do before the revenue to get to the revenue? Then what's my target for gross profit? What's my budget for people? What's my marketing budget? And the word budget sucks because budgets are like diets, right? Nobody wants one. But it's, hey, this is what we're thinking we're going to spend. How are we doing on the spend? And then is it actually working? So we talked about labor and looking at the labor. Is it delivering the value we need? Another one that's horrible for me is marketing because we can't say which half of the money is working. But the more we can have metrics around that and a scoreboard to say, this is what we said, this is what we did, on track, off track. Otherwise, it's all like, I think we're doing okay.
Yeah, no, dashboards and figuring out which metrics, which KPIs make sense for the business and making sure you're religious about updating them, making sure that they're on that dashboard is important. That also brings up an important point about data. A lot of businesses, they start out in QuickBooks or Xero or FreshBooks, and that's fine when you're starting, but there reaches a point when your business needs more information in order to figure out what are the next steps. And that's where you have to start thinking about, okay, what financial systems do I need to maybe think about? What do I need to change in my finance system to be able to track things? It's fine to track your marketing spend in an account, but if that account has all kinds of things and you can't figure out your customer acquisition or you can't figure out your ROI on your marketing, you're doing yourself a disservice. So you have to be smart about the data that you have available to you as well.
That's correct. And you have to capture it. And you have to have a reasonably good system of arranging it and
Yeah.
pulling it all together. And I think that's one of the problems. You know, most of our businesses are using QuickBooks, some are on NetSuite or some of the other more complicated systems. The problem is that's one part of the picture. It's not showing the early part of the picture, which is all the lead flow and the conversion rates and predicting sales. I've never found software that was good at predicting cash flow for a business that wasn't consistent. And most small business isn't consistent. I mean, if you're consistent, great, but most small businesses aren't. And so using these automated cash flow projections, I don't even know how they make up these numbers or how they work. What have you found?
I was playing around with some AI stuff, trying to do a cash flow for one of my clients. And when it came back, I looked at it and I'm like, yeah, this isn't even grounded in reality. Like I know what this business does. And, to tell me that they're going to double their cash in the next, 3 months just does not make any sense. So, you have to understand the business and be able to vet these things. But no, I agree with you. I've had a lot of difficulty finding without a business being consistent a good piece of software that will just do that automatically. It does require somebody to really sit down and say, does that make sense?
And that's the biggest part. Does it actually make sense? The other thing I found, there's a lot of add on software, I'll call it today, that takes your financials and it dices it a million different ways and it makes it look very pretty. And I'm like, that's very nice. That looks very pretty. And the first time I see it, I'm impressed. But after 3 months of seeing it, I'm like, how is that actually helping me? Like, what am I going to do with these numbers? They look good in the sense that when I say look good, I mean, they're presented in a way that looks beautiful, but what do I actually do to grow profit? And that's what I find many of them don't have that part of it, or they just tell you, well, you need to cut your cost by 20%. And you're like, how do I actually do that? Because it's not that simple for a variety of reasons. And so that's why I think having the wisdom and the discernment to the numbers is the part that many times is missing on the software side.
No, agreed. Agreed. You need the expertise and the know-how to be able to take what the system is telling you and being able to translate it into something that's usable with the right insights so that you can figure out what are my next steps.
Now, you've worked with large companies.
Yes.
So people assume they're a large company and they must know what they're doing. Is that grounded in reality, or many times do they not have a clue what they're doing?
When you're in a big company, sometimes there's a lot of layers and, it's like the game of telephone. When you start at the beginning of the game telephone, by the time you get to the end, it's not the same message that was delivered at the very beginning. Well, when you're in a big company with all of these layers, I think sometimes the message gets befuddled either up or down as it's coming. And what you end up with is maybe a situation where everybody's working in a very disjointed fashion. Not everybody's rowing in the same direction. Being able to have that clear communication throughout any organization is really what's key to making sure everybody is doing the right thing for the vision that's there for the business.
And that's true. The other thing is, I know a lot of people always want to know, well, what's the industry average or benchmark? And I'm like, so many businesses go out of business that if you're using the average, you're probably going to go out of business, or you're basing your average off of people who also don't know what they're doing. And now we have the blind leading the blind.
Right,
You've got to figure out, how do you make it profitable for you?
right, exactly. Benchmarks are okay, but remember, you have to understand the context in which the benchmark is set.
Correct. Now, I love benchmarking against ourselves, right? Because
Mhm.
then we're improving what we've done. And we said, hey, we've done this before. We're going to do it again, or we can improve this. So I do like that from that standpoint. And I think that's important. But be careful who you compare yourselves against, because for all you know, they're losing money and they might not tell you. And it happens a lot of times. And I think in today's world of business, with private equity and so many things out there, there are a lot of companies that will intentionally lose money to drive up their customer base, hoping that in 3 years after they capture the market, they can then raise prices. And it rarely works. Most of them, well, they've got about a 10% batting average on average. So,
Yeah.
if you want to fail 9 out of 10 times, that's great, but it's not the kind of odds I like.
No,
And especially if it's my business, I want my odds to be at 99% that I'm going to get it right.
agreed.
Is there anything we should have talked about but didn't get a chance to?
Oh, I'm sure there's a whole laundry list of stuff.
If people would like to learn more about you and your services, where's the best way for them to find you?
Best place to go is my website, rockbridgecfo.com. I've got all of the information about what my firm does, as well as a really rich blog post. So if people are looking for information, there's some checklists out there. There's, a lot of good information for business owners if they want to take a look at it and, maybe get some thoughts that will spur on their business.
And we'll make sure to put those in the show notes. Thank you so much for joining us today.
It's been a pleasure.
Let's face it, profit follows clarity. When you measure what matters, margin, cash, working capital, decisions get simple. The P&L is wonderful, but you've got to pair it with other things like the 12-week cash flow forecast, the balance sheet, and knowing how to read it month to month, knowing that your margins are good and they haven't changed, knowing what products are profitable and which ones aren't, and knowing when you can spend. Bottom line, if you don't want to do this or you need help, have somebody like Laresa or me help you take care of this. We'll build out your dashboards. We'll make it simple. We'll show you where to focus so you can do the parts of the business you love and let someone else do the parts you hate. At the end of the day, it's not that you need more resources. You need to be more resourceful. And that's what I help you do. Remember, we focus on the bottom line. Thanks for listening to the Profit Answer Man, where we believe more revenue doesn't mean more profit, and the bottom line is what really matters. If you're ready to stop living check to check, take control of your cash flow, and finally get paid what you're worth, we should talk. We work with 7- and 8-figure businesses and well-funded startups. If you're a smaller business, check out the Profit Blueprint program. It's a do-it-yourself solution that also can come with my direct guidance in the same level we give our one-on-one clients. When you're ready for results, book a discovery call. There's a link in the show notes or at profitcomesfirst.com. You'll be speaking and working directly with me. In the meantime, grab your free copy of the Profit Blueprint at profitcomesfirst.com. It's the next step to turning your business into a consistent cash flow generating machine. If you'd like to dig more into leading yourself, your company, and building the ultimate life, listen to my other podcast, Richer Soul, where we cover these topics in great depth. There's a link in the show notes. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.